And it's gotten into the game in recent years of being more price promotional, and you remember the experiment a year ago or so, and so it's gotten more dependent on that rather than just selling the product by itself. I like a product by itself sells. I feel better about Gillette if people buy the Mach 3 because they like the Mach 3 than if they get a Beanie Baby with it. So I just think it's fundamentally a stronger product if that's the case, and it probably is. We own a lot of Gillette, and you can sleep pretty well at night if you think of a couple billion men with their hair growing on their faces. You go to, it's growing all night while you sleep, and women have 2 legs. It's even better. So it beats counting sheep. And those are the kind of business. But if you think, what promotion am I going to put out there against Burger King next month? And what if they sign up Disney and I don't get Disney? And I mean, that is, I like the products that stand alone, absent promotional or price appeals. Although you can build a very good business based on that, and McDonald's is a terrific business. It's not as good a business as Coke, but there really are hardly any. It's a very good business, and if you bet on one company in that field, aside from Dairy Queen, of course, you want to bet on McDonald's. We bought Dairy Queen here a while back. That's why I'm plugging it shamelessly here. Yeah, way back there. What do I think of what? The electric utility industry. Well, I've thought about that a lot because you can put big money in it, and I've even thought of buying entire businesses. There's a fellow in Omaha actually that's done a little of that through Cal Energy, but I don't quite understand the game in terms of how it's going to develop with deregulation. I mean, I can see how it destroys a lot of value for the high-cost producer, once they're not protected by a monopoly territory. And I don't for sure see who benefits and how much. I mean, obviously the guy with very low-cost power, some guy's got hydropower, at 2 cents a kilowatt or something like that, has got a huge advantage. But how much of that he's going to get to keep and everything, or how extensively he can send that outside his natural territory, I haven't been able to figure that out so that I really think I know what the industry is going to look like in 10 years. But it is something I think about, and if I ever develop any insights, that call for action, I'll develop. I will act on them. Because I think I can understand the attractiveness of the product, and it's all of that, all of the aspects of certainty, of user need, and the fact that it's a bargain and all of that. I understand. I just don't understand who's going to make the money in it 10 years from now, and that keeps me away. Yeah.
Do you think that the market has favored the large cap blue chip stocks over the small cap stocks over the next couple of years?
The question is large caps versus small caps, and why have large caps overperform. I don't know the answer to that. We don't think we don't care whether companies large cap, giant cap, middle cap, small cap, micro cap. It doesn't make any difference. I mean, the only question to us is, can we understand the business? Do we like the people running it? And does it sell for a price that is attractive? From my personal standpoint, running Berkshire now, because we've got pro forma for Gen Re, I don't know what we have, maybe 75 or 80 billion dollars to invest, and I only want to invest in about 5 things. So I'm really limited to very big companies. But if I were investing $100,000, I wouldn't care whether something was large cap or small cap or anything. I would just look for businesses I understood. Now, I think that on balance, large cap companies as businesses have done extraordinarily well the last 10 years, and way better than people anticipated they would do. I mean, you really have American business earning close to 20% on equity, and that's something nobody dreamed of, and that's being produced by very large companies in aggregate. So you've had this huge revaluation upward because of lower interest rates, and then much higher returns on capital. And if American business is really a bond, disguised bond that earns 20%, has a 20% coupon, it's much better than if it's a bond with a 13% coupon. And that's happened with big companies in recent years. Whether it's permanent or not is another question. I'm skeptical of that, but I don't. I wouldn't even think about, except for questions of how much money we run. I wouldn't even think about the size of the business. A good small See's Candy was a $25 million business when we bought it. I mean, if I could find one just like it now, even as big as we are, I'd love to buy it. It's the certainty of it that counts. Yeah, way over there.
You mentioned earlier that in buying stock, almost every company is public. And one thing until the last 5 years, real estate has been primarily private. We're now seeing a great securitization of real estate. And what is your insights into the industry?
Yeah, you're talking about real estate equity. There's been securitization, enormous securitization of the debt, too, of real estate. And that is one of the items right now that is really clogging up the capital markets. I mean, the mortgage-backed securities they're just not moving in commercial mortgage-backed, not residential mortgage-backed. And so that's. But I think you're directing your question at equities probably, and the equities. If you leave out, the corporate form has been a lousy way to own equities. I mean, you've interjected a corporate income tax into something that people individually have been able to own with a single tax, and by having the normal corporate form, you get a double taxation in there you really don't need with real estate, and it takes away too much of the return. REITs have, in effect, created a conduit so that you don't get the double taxation, but they also generally have fairly high operating expenses. And if you get real estate, let's just say you can buy fairly simple types of real estate on an 8% yield or thereabouts, and you take away maybe close to 1 or 1, maybe even 1.5% by the time you count stock options and everything. It's not a terribly attractive way to own it. Maybe the only way a guy with $1,000 or $5,000 can own it. But if you have $1 million or $10 million, you're better off owning the real estate properties yourself and sticking some intermediary in between that will get a sizable piece of the return for himself. So we have found very little in that field. You'll see an announcement in the next couple of weeks that may belie what I'm telling you here on one thing. So I don't want you to think I was double-crossing you up here. But generally speaking, we've seen very, very little in that field that gets us excited. People sometimes get very, very confused about. They'll look at some huge land company. I'll take one that won't evoke any emotional reactions on the part of anybody, like Texas Pacific Land Trust, which has been around over 100 years and got a couple million acres in Texas. And they'll take they'll sell 1% of their land every year, and they'll take that as applying to everything and come up with some huge value compared to the market value. But that's nonsense if you really own the property. I mean, you can't move. You can't move 50% of the properties or 20% of the properties. It's way worse than an illiquid stock. So you get these. I think you get some very silly valuations placed on a lot of real estate companies by people that don't really understand what it's like to own one and try to move large quantities of property. REITs have behaved terribly in the market this year, as you know, and it's not at all inconceivable they would become a class that would get so unpopular that they would sell at significant discounts from what you could sell the properties for. And they could get interesting as a class then, and then the question is whether the management would fight you in that process, because they would be giving up their income stream for managing things, and their interest might run counter to the shareholders on that. I've always wondered about the REITs that say, our assets are so wonderful and they're so cheap, and then they go out and sell stock. I mean, there's a contradiction in that. If they say our stock at 28 is very cheap, and then they sell a lot of stock at 28 less an underwriting commission, it doesn't. There's a disconnect there, and so. But it's a field we look at. I mean, Charlie and I can understand real estate, and we would be open for very big transactions periodically. And if there was a long-term capital management situation and translated to real estate, we would be open to that. The trouble is, so many other people would be too, that it would be unlikely to go at a price that would really get us excited.